Good morning from Toronto, traders. Thanks for joining me and apologize for the late start. Hopefully, you can hear me loud and clear. It is 8:05 a.m. Chicago time on episode number 2289. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. As you might hear, I might be losing my voice, which is fantastic. So, been dealing with a throat thing here for a couple days. Hopefully it'll go away. It's painful to talk a little bit, but here we are. Let's take a look at the convergent trading pre-market summary sheet this morning. We have a market that has a mild risk on tinge. The S&P up 16 points. The S&P was up as far as 4177.50 this morning, basically 30 points higher. It's pulled back a fair amount. So the S&P is challenging. Its big balance area edge, which is around 74. So it's interesting because this is what I expected going into the Friday afternoon close, and we didn't get that. Um, we're seeing the Dow turning up as well, and across the board, everything is risk on. Europe's been pretty well risk on for the entire session. Crude pulling back a little bit. Crude really trading down at 87, off $1.33 or 1.48%. Very interesting there. Silver is a little bit higher. Copper is basically unchanged. Looking ahead, really, what's driving things? We had non-farm payrolls on Friday, middle of summer, and now we're on the Monday after non-farm payrolls with very few or no real key market moving events. So what you have here is a combination that could be relatively lethal, in my opinion, to some traders where we are chasing trades, ghost trades that aren't there. This is the kind of environment that would push you to invent trades as opposed to just reading what the market is doing and following your plan. So no key events overnight. Monday after NFP during summer. Conflict with Taiwan brews. China continues to run its military exercises. There have been 66 sorties by the Chinese Air Force detected that crossed the middle of the Strait of Taiwan, and so China's seeing it as it's running exercises on its own sovereign territory, whereas Taiwan is saying that they're violating their airspace and violating peace. The U.S. is now in the middle of that, and it's who knows where this thing's likely to go. But everybody's everybody's afraid of the big dragon. So far, that's something we need to watch. Not much progress in the Russia-Ukraine issue. And then right now, techs, real estate, and utilities are firming up or pretty firm. On the calendar, retail sales out of Great Britain. And then we have the Westpac Consumer Confidence, which is a big number for Australia at 7:30 Eastern. And then at 8:30 Eastern, we have the Australian NAB Business Confidence number. So that's where we are. Looking at the S&P, the S&P is in a pretty elongated multi-distribution profile and pretty light, on relatively light volume for the range. The S&P is in price discovery mode. It's been basically trending for the entire session, except for now it's just pulling back to the overnight point of control. But even then, the overnight point of control in the S&P is not well formed, in my opinion. Um, in my opinion, 53% of the inventory is more long than short, 46.75 points of range, and we've moved the point of control way, 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 way higher to 41.59. So this is kind of an um, interesting situation here. We did just get Nvidia's preliminary Q2 22 earnings revenue 6.7 billion, expected at 8.1 billion. Huge miss on revenue. Q3 revenue uh, looking revenue view 6.7 billion versus 8.3 billion as well, 8.38 billion, off 19% sequentially and negative 3% year on year, primarily driven by weaker gaming revenue. So let's look at Nvidia here in the pre-market. Here it is. So this is pushing, of course, the S&P, the Nasdaq around. There's Nvidia right there, just coming off, down 7% pre-market, pretty substantial there. We're seeing this move taking place currently. Um, as far as what we've got, because I want to keep these short as I am supposed to be on break, but I'm doing the trader bite while on break because, you know, because my family loves it when I get up and do homework instead of have breakfast with them. Um, so looking at the S&P did a couple of really exceptional things on Friday. We had a very wide IB. We had a pretty strong price discovery from 4107 to 4153. And then we basically took out the prior session's low. Remember, I was expecting the market back at 4120 earlier last week. We got that on Friday. And then we finished the session having not touched either of the really important stats. And that is, it did not touch the IB stat, did not break basically the S&P, despite what looked like pretty aggressive price discovery, could not take out the IB stat, which is a 96% historical probability, and couldn't take out the overnight stat, which is a 97 or so percent historical probability, somewhere in that range. Very, very unusual. I have to admit that the trade on Friday was just absolute garbage for me. It was I traded the NFP poorly, and then I came in and took a couple of trades in crude, going in the right direction, but too tight a stop for the volatility, and ended up getting stopped full stop twice. And I just did not recover because I had to leave early on Friday, and it was just very. I had the experience on Friday of what it's like when things don't work very well. It just pulls into question. It's that imposter syndrome, but it pulls into question like, did I lose something? What's going on? But really, they're just trades that didn't work. Did not see anything. I mean, you could argue that on Friday we had this really nice mid tag, but really this could have gone either way. I did like the 41.35 short right here, this trade here. But as you could see here, it went about 10 points and then it ended up taking out the stop. I did like the long down here, which was the 41.23. This long down here, I set these up in the CT Maven's channel. I like that trade. I just could not get an entry on it. I was too slow, too late, so I missed this run up. And also, I didn't like that I was going against the mid stat. Although Friday clearly showed that it was willing to just crisscross the mid all day long, although it stayed above, and that's the kind of that's the those are the factors that kind of throw things off. We have the opening print of 4108 on Friday with the IB at 4107. That's quite bullish, quite a bullish opening print. We have what looks like a drive, and then it comes. So now I'm buying pullbacks, right? And it comes all the way back almost to the open, but doesn't. Then it pushes all the way back up. So you're thinking, well, it's down here, so I need to be selling for the IB stat, and it just squeezes right through. So now it's like, oh, well, it's up here, so I need to be looking to For setups, I need to wait for setups, not looking for, but to wait for setups to get long into the IB stat or the overnight stat. And neither one came to fruition. The overnight low was right in here, the IB was right there. This mid short here would have been ideal for this situation, but it didn't work out. It's just overall a frustrating day, and I'm not going to be here for it. I'm basically shutting down after this trader bite and going and spending time with family. But I'm guessing that today is likely to show the same type of activity. And don't forget that the overnight range is actually pretty wide. It's actually pretty wide, so it appears to want to have pretty good price discovery, and that, of course, triggers us off in that we would want to start um, looking for activity to support that. Looking at the bigger picture, the TPO chart, this is the balance that I keep talking about with the 4120 point of control, and we are up here. We're above Friday settle, and we're above this big area, and we are battling this area. To me, it would be really tough. It would be really tough for me um, to expect that this will just run away to the upside. And the reason I don't expect it to run away to the upside, and thanks to Nvidia now, this may be the case that to back me up, is that there really isn't all that much that's going on here that's going to give traders or investors a lot more confidence. We had a very, very hot non-farm payrolls number. It came in very strong. The Fed is going to break everything in order to contain inflation. Remember, the Fed has two mandates. It has two missions. And by the way, the Fed is not immune from political pressure. The Fed has two mandates: full employment and controlling inflation, low inflation. And we have full employment. Boy, have we got that pegged. So the employment portion, they don't need to worry about. That's taken care of itself. So now their focus is inflation. And if it means raising the unemployment rate by a little bit by putting people out of work to cool things off, that's fine. And what the non farm payroll number on Friday showed is that they really don't need to worry about the employment numbers for now. So to me, it's just look, the market's going to do what it's got to do, and the market does what it does. It doesn't really care what my opinion or anybody's opinion is, but the fact is, it is difficult to argue that it is likely to continue to break out higher. I'm still expecting that this is likely to test higher, come back in potentially the double O, the 4200 area. But I'm still expecting that this area will likely to be a magnet, and I'm still expecting that they will do what it takes to bring this thing down. So, again, I don't want to color the facts that are in front of us with a macro theme, but to me, it just seems like it would be very, very difficult for this market to maintain higher prices given all conditions. There's the adage that a bull market climbs a wall of worries, right? But there is no news, and it's not likely to do so today. I'll eat my words maybe, but what we had last week was a peak, lower high, lower low, lower high, lower low, and we're breaking that. So we expect some strength on the upside on the break of Friday's high, but don't expect that this thing is likely to continue to push as it's postured to do here. Okay, so that's that. Looking at the profiles side by side, we got exactly what we had discussed last week. A rounded top, expected it to roll over and come back to where? Come back to the 4120, which we did. Um, and now we are trading way up here. So we do have a former high. We have an overnight high that took out the swing high here, which was at 72, was it 72.50, something like that? I don't remember the number. So we've already done that work. Today, I'm expecting this thing to find support. You need to pay attention to these value areas. Despite the trade on Friday being like this, we do have a pretty Gaussian profile. We really ended Friday in balance. Thursday was definitely in balance. So look for this settlement price, which is also the value high on TPOs, to be tested out. 41.47 becomes the key test area. So any drop from here likely to target 41.47. If it gets below 41.47, is unable to climb and hold, then you're looking for the point of control, of the day. And then if it's not able to bounce off of the point of control and get out of the value area of Friday, then you are likely to see the value low 41.25, which brings us into the 41.20 magnet. So I'm not going to be here, but I'm expecting that when I check in later, that it would have struggled to come down, that it would be a struggle for it to come down. And if it does, it is likely to bounce off of this 41.47. Also, Friday's high. But if I see acceleration into Friday's range, then you're looking at it testing these value areas. Okay, they're completely valid. So I don't have much more to say. It's a coin toss here in terms of the type of action we're likely to get. Crude continues to be weak, one time framing down, as you can see here. Crude is just having a really hard time maintaining higher prices, and crude has a pretty decent value area as well. So some pretty decent resistance in crude up into this region here, the 88.60 into the 89.30, which actually was a 89.35, which was a setup for Friday. I'm expecting it to run into some resistance. So we have a gap, an internal gap. So look for a gap to settle trade in crude early on. Expect it to push 89.01 before it makes its next move, which if it continues to trend in the same direction with this almost double bottom, double TPO low, it is to take out Friday's low in the 87 region. So that's what I'm looking at. Good luck today, and I'll catch you tomorrow morning. Take care.